TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 53. You get the NASDAQ flat. S&Ps are off 3.5. Gold contract, that's up 8.40. That a rejected lower price. You had a price spread out here of $18 thus far. Silver up 17 cents, $14.87 an ounce. You got platinum at $9.88. Light sweet crude continues lower. That's down 44 cents at $48.08 a barrel. Bonds are the story, folks. Bonds, the dollar and gold are going to be the story out here. Bonds, however, have been on a consistent basis, wanting higher price, dictating the market out here. The 10-year up 19 ticks, 127.14 with wide price spread, accelerated volume. 30-year up a full point and 6 ticks, 156.10. Both the 10 and the 30 want higher price, lower yield. King dollar's getting smoked, toasted, roasted, all of the above. That's down 1,200 ticks at 96.45. King dollar wants to go after its lowest swing point of the 93.30 area. Euro up 178 at 110. And the yen down 57 at 123.57. Now, let's go over, first off, we're going to go take a look at the King dollar. Why King dollar? Because what happens, folks, the market does not like a low dollar. What the dollar's done out here today, and here's your confirmation, we've already done 38,000 contracts. When we have come down on the 21st of July, as well as the 27th of July, you did 48,000 contracts. When we went higher with 31,000 contracts and 35,000. Bottom line, this is barreling down. It's going to basically take apart the 96.36 lowest swing that was established out there on the 27th. What I suspect you're going to see, though, is that you're going to go right after the lows that were out there from the 18th of June. Now, what does that do? Let's go over to the S&Ps. The S&P out here, what the S&P had done is this. We take a look at the E-mini. We did a counter trend bounce. You get into a price point and on that counter trend bounce up into the 2109 level, which got you over the highs of last Friday. Now what I expect you're going to see, you're going to close under those highs. You're going to have lighter volume. What does that set up? That sets up that, number one, it can't get to the high. Number two, you still have 3 lower highs, 4 lower lows inside, 3 lower lows inside the S&P. What does that set up? That sets up that you're going to get out to the lower end once again, and that's kind of unusual because we are in window dressing, and it looks like this window dressing just is not going to fly. Gold. We go to the gold contract. We look at gold. What you have with gold is this. For a Friday, folks, this is absolutely amazing. They got gold down to 11 to 1079. It's come off that bottom by 20 bucks. It has all the makings today. When you can't whack it down, bottom line is that it has the makings today to basically your first thrust up here to 97. Good thrust up. This baby can actually get up to the 1104 area. Gold looks like it's real comfortable at 1104 right now. Now, the bond market. What do you have with bonds? Bonds are amazing, folks, okay? The bond market, thus far, we're up 1.7 ticks on the 30. It's taken out all the swings, and it's taken them out with volume. That's setting up a 30-year running to 165 again. It's setting up a yield structure inside the 10-year of getting under 2 again. So what does that dictate? That dictates that the amount of money that's going in the bond market is phenomenal. There's more demand than there is supply. And what does that set up? That sets up lower prices inside the equity markets. We go take a look at the NDX 100, the 3 Qs, what you have with the 3 Qs. That got to a higher high today. It's not going to be able to handle that higher high. You can expect lower prices coming into this close out here today. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN-CD. Have a great one. Have a safe one. Look forward to speaking to you right back here, 10 o'clock Monday morning.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metals CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.